Hello and welcome to the look ahead for Thursday, the 3rd of October, with me, Fiona Sincotta, Senior Market Analyst at City Index. So overnight, we're going to be watching for Australian services and composite PMIs. These are the final reading, also the trade balance from Australia. In the European session, we've got UK services composite PMI, again, the services and composite PMI, the final. And the same with the Eurozone as well as PPI inflation. In the US session, we'll be watching out for ISM services PMI, jobless claims, and challenger job cuts. So just kicking off with what to expect over in the US. I mean, what we've seen recently is that the labor market data, which is very much in focus this week, has been showing us that the US labor market has been holding up a little bit better than expected. Those concerns that the labor market was collapsing that we saw at the beginning of the summer were very much overdone. And actually, the data is showing us that whilst there is some cooling going on, the labor market is very much cooling rather than collapsing, which is good news as far as the health of the US economy is concerned. And also, it means that the Federal Reserve is more likely to opt for a 25 basis point rate cut at the November meeting rather than the 50 basis point cut. And we've seen very much that sort of the stance that Federal Reserve officials are taking. We saw Jerome Powell speak at the beginning of the week, and he was very much supportive of a 25 basis point rate cut rather than a 50 basis point rate cut. And as a result of that, those reining in of outsized rate cut expectations, combined with that sort of safe haven flows that we've seen owing to the escalation of tensions in the Middle East. I mean, we've seen a rebound in the strength of the dollar. This is the US dollar index that we're looking at here. We can see that there was this support zone that was very much there between the 100.7065 and down at that 100 point sort of 25, something like that. So there was the support zone. The US dollar didn't break through that, actually rebounded higher. If we're going on the upside, what the level that we're going to be keeping in mind now is that 102 level, basically. That's the level that we saw that was in focus, 101.90, something like that at the beginning of September. That's a September high. It's also the 50 SMA. If we get a rise above that, then we could be looking towards the 105.50 level, 102.50 level, and even up towards 103. On the downside, that's the support zone that the US dollar is going to need to break down in order to extend losses further and create a lower low. So let's just have a look at what that means as far as the euro-US dollar is concerned, because it's quite interesting because not only have we had this strengthening of the picture in the US, particularly with regards to the jobs market, at the same time, we've also seen this weaker than expected inflation in the Eurozone. Eurozone inflation eased to 1.8%, down from 2.2%. So it's the first time that it was below the ECB's 2% target for 3 years. So, again, supporting the view that the ECB is going to be cutting interest rates by a further 25 basis point cut in October meeting. PPI inflation is expected to show growth of 0.3% month on month. That's down from 0.8% in the previous reading. So slight cooling or in inflation, again, supports that view that consumer price CPI inflation could cool further. This is euro-US dollar. We've seen that 112 fail to move above that. It looks almost like a double top forming there. It's just falling below that, or it has in fact fallen below that rising trend line that was dating back to beginning of August. And we're just testing now the 50 SMA, which is around that 110.50 level, just below the 110.50, but that's where we are at the moment. If we're gonna be looking, this is the key level here, I think, is the 110. If we get a break below that 110, then that's actually going to create a lower low from that mid September low. So that's the level to be watching out on the downside. On the upside around here, the 111 is the level to be watching. That's the rising trend line resistance. Then you've also got 111.40, which is the December 23 high before bringing 112 back into focus. The other one just to be keeping an eye out is sorry, just bear with me, GBP USD. We've just seen a slight sort of correction there, as well as it moves away from that sort of 134 level that we had reached at the end of September. You know, this has been a steady series of higher highs and higher lows that have been forming, but now we're just looking to test that 132.60 as basically the market's just reassessing that divergence between the Bank of England and the Federal Reserve. Perhaps it wasn't quite as big as the market had been expecting, especially in light of that slightly stronger US jobs data than what we're expecting. So jobless claims, as I said, are due tomorrow. If we get some stronger than expected jobless claims, that again could support further US dollar gains, which could result in a taking out of this level here, that 132.60 level. Also, we've got the PMI data for the UK, though, that has been particularly resilient, showing that the service sector remains strong. So, you know, unless we see some weakness there, that would obviously help break down that support. If we do see strength in the UK services PMI, obviously it's a final reading, doesn't tend to be as market moving, but then we could see the price rebound higher towards that 134 level. If we get a break below here, sorry, the 132.60, next one to be watching out for is that 131. That's just the round number before the 130. This is a key level, 130. Obviously, it's psychological level. It's also the September low and a level that's been important in July as well. If we get a break below that, that's a lower low that will have formed. So the other one just to be watching out for, let's take a look at what's going on with the NASDAQ as far as what we've been watching with the US data and what's going on as far as risk sentiment is concerned. Concerns over the Middle East obviously weighing on tensions. We see this rise. We saw this breakout of the symmetrical triangle, rose to the 20,300 level, has actually fallen lower, taking out the 20,000 psychological level, and that's where it's just hovering below. It doesn't seem to be terribly decisive in that move lower. I mean, it's certainly not moving into a sort of a bearish move at all. We know, as far as we're concerned, the bulls do still have the upper hand, even though we've taken out that 20,000. It would take a move below here, I would say around the 19,200 for a negation of that recent breakout. So as far as bulls are concerned, they're going to look to try and get over that 20,000 and over the 20,300 level, which is that September high, in order to bring the all-time high back into focus. On the downside, like I said, 19,200, that's 50 SMA. That's a level that I'll be watching to negate that near-term uptrend and for things to be looking a little bit more neutral. So I hope you've liked everything that we've seen today. And if you do, then please do give this video a like. And if you would like to see more videos like this, then please do subscribe.